Thank you everybody for jumping on. Really good to see you. As Rob says, yes, I head up the property side, and what we do at Holborn Property, and Holborn does all the the pensions and the life assurance and the investments, etc. But I only do property. That's all I do. I'm based in Dubai, and always been doing property and mortgages. And what we do is we have 5 different property partners, one of which is Michael, who you can see there, works for RPA, and he's going to talk about some of the properties he's got. But what I want to do first of all is, okay with you, I'm just going to, without wanting to bore you, what we do. So full property investment arm, the unique business model. So we actually talk to people, talk to clients about what their objective is, what their budget is. Really, so many people, they want to buy, they want to invest in the UK, and the most important thing is timing. Do they want it off plan? Do they want it now? Do they want it rented now? Do they want it 2 years' time because of their savings capability? So we go into all of that. We do the due diligence, and that's the main thing, due diligence on all the projects. That's making sure the developer has got the funds in place, the planning permissions in place, the market's correct, there's going to be enough demand for the buy to let, and by the way, enough demand when they come to sell. So a simple little slide there, the ripple effect. We are very good at finding areas maybe outside of the centre of Birmingham or the centre of Manchester or the ripple effect is, as people are moving out and they're commuting back in again, we want to get ahead of the curve. Affordability, I just mentioned, that's making sure that you can afford it, the tenants can afford it, and then there's a market afterwards for people who want to buy it. Regeneration, I just mentioned Birmingham and Manchester, probably the 2 most famous when it comes to regeneration, and I know Michael will touch on that later on. So many major cities that we have in England have been transformed. I mean, Manchester and Birmingham are 2, for example, which were, they were cities where there was cotton industry, the mining industry, there were so many industries, and now they're being regenerated, and there are people at HSBC, some of the major banks up there. Infrastructure, that's important. I'm only going to mention it once. HS2, that's a great example of a train line which is going from London all the way up through Birmingham and up north, and that is creating a lot of interest. And finally, gentrification. So many cities are beautifying themselves, and again, that creates demand. So that's our aim. I just mentioned that Mike at RPA is an exclusive partner. We have partnerships with other companies as well, and so therefore we have an agreement. On our website, we've got 35 different properties, but don't worry, don't panic. We're not going to go through 35 developments. What we wanted to do today was to give you a smattering, an idea of what we do and how we do what we do. So you can see that slide, and this is what we do. A very, very interesting, boring slide. Research and underwrite, I mentioned that. We're looking at the projects. We're making sure that the projects are in a good area. They're going to rent well. Most people, by the way, out there, one of their key ambitions is to make sure the rent covers their mortgage. And with an interest-only mortgage, that's what we try and aim to do. We obviously provide solicitors and conveyancing, a monthly site visit, photographs are posted out. We have a Holborn mortgage department, and mortgage is such a big subject. Obviously, everyone's reading the newspapers and watching the press. Such a big and such a changeable market. But that's an area that all of our clients should get in touch with sooner rather than later, and just give them peace of mind that they're okay on a mortgage side. In-house letting speaks for itself. Mike, you've got your own department that looks after the lettings. Our other partners do the same, and that's my phone. So it's actively managed, which means we're actually on site. We are just trying to, and tax and insurance. We have our own tax specialist at Holborn. Is that right, Rob? Bring you in. What we do.
Sorry, I'm on mute there. We do have our own specialists that can help and guide clients through the tax nightmares of property. Yes.
Yeah, and finally, when it comes to 5 years, 10 years, 8 years, wherever it may be, we can help on the resale. And I know a topic that Lee is really keen on and specialises in is clients who want to build a property portfolio, say over a 10-year period, trying to get together 5 properties under one roof, and we're going to touch on that later. Right. Why property? Well, that's all I do all day. I love property. All the other tools you've got to generate your wealth, but property I like because you can go and see it, you can touch it, you can have photographs of it, and probably the only asset class where you can get a mortgage. I mentioned mortgages earlier on. Now, clients fall into one or two. One, they want yield, or two, they want capital growth. Yield are the ones that are people, obviously not as old as me, who are looking towards supplementing their pension. And for the younger people, obviously capital growth, I would say. Difficult to get them both. It's obviously the UK. I know Michael touched on this. What a stable market it is. I think since records started, there's not one 5-year period in history you could put your finger on where property is not actually marched ahead of itself. Obviously 1989 and some of the market collapses we've had, but within 5 years it's corrected itself. So that's why I like property. I'm going to skip over that because Mike's got a better one. Right, so first of all, and please do put any questions up there as we go along. I'm just going to start first of all on Citygate York. And don't worry, as I said, I'm not going to go through 35 different developments, but what we've done, we've chosen 5 different projects in 5 different areas, each with a different unique selling point, for whatever a better expression. So York is a beautiful city, halfway between Edinburgh and London, and I think the 3rd most visited by tourists in the country. So we've got a development there. It finishes, as you can see there, very, very soon. Starting prices from 329, 250-year lease. You can read all that. I'll go into how we do the booking, the reservation deposits later, but it's a great building. It's nearly finished. And the other thing that it does, which Mike will touch on 2 of the projects he's going to speak about, it does have the ability to have Airbnb. That is so, so important, because when you've got a city like York with the tourists there, Airbnb comes into play a lot and can certainly drive up yields. So that's why I like York. It's not one of Mike's, but I'm going to go to one of Mike's now. Mike, over to you.
Yes, thank you, Chris, and thanks for the starting information. I just wanted to touch on a couple of things that you talked about, and you mentioned about yield and the capital growth, and that's something that the RPA group we try and make sure that our developments have a good proportion of both. It's very hard, well, it's almost impossible to get a very high yield and a very high capital appreciation. So as you mentioned, some places will have this extremely high yield, but you may not have such a good amount of growth over that time. So our projects, what we try and do is focus on areas where we have a good realistic appreciation on the capital growth side, while also bringing a well-rounded yield as well. And touching on Brighton and Hove, this is Goldstone Apartments, fantastic location, 5 minutes away from Hove Station. And if anyone on the webinar this evening knows of Brighton, I mean, they call it London by the sea. So I mean, if you're looking at the prices starting at £362,000 for a 1-bedroom, that's considerably higher than cities like a Manchester, like a Birmingham. But there's a good reason for that. We've had over 2 million overnight visitors in the whole of last year only itself. So that's it actually is the most visited coastal area of the whole country. Which, and Chris mentioned about the short-term let side, the Airbnb. This area is without a doubt one of the best areas for that in the UK. And we have a team that works with us and Holborn on a short-term let basis. And as you can see, short-term rental yields of up to 13%. But if you didn't want to go down the short-term let, it's not a must, and looking at it as a traditional long-term, annual rental, we're looking at gross yields of up to 6.5%. So, that sort of stuff, you're not going to find that in kind of central London. You're going to look at that in areas like a Brighton, a Manchester, and a Birmingham. So fantastic development, great developer, well-funded developer. and that's going to be completed in Q3 2024.
I think it's a beautiful city. And the other thing about it is that they've not built anything in Brighton and Hove for a long, long time, Mike. So that's what gives this something special.
Yeah, no, definitely. And I think the statistic is, within a 4-mile radius, they haven't built any new apartment buildings in the last 5 years. So nothing is completed in that period of time. And that radius there is Brighton and Hove is literally right next door to Brighton. You're only a 12-minute walk away from the beach as well from our development. So yeah, it's a fantastic opportunity for someone to have not only a good yield, but looking at that long-term growth, that 10, 15, 20-year period that we talk about for our investors.
And commutable into London, that's important.
Yeah, just over an hour. So I mean, historically, I've got some friends of mine that their parents, lived in that area and used to take a 2.5 hour train into London back in the day. But now there's a fast train from Hove and also from Brighton Station, 2 different stations. But you're an hour and 5 minutes away from central London. So it's that commuter belt that we talk of between an hour to hour and a half, which is realistic. This is well within that.
I think I touched on it earlier on, but as we're going through them slide by slide, I think it's worth saying that to reserve a unit, you pay how much?
It'd be £2,000.
£2,000 to reserve it. That's yours. It's taken off the market. Then in about 5 to 6 weeks, I'm not going to repeat this for every one of them, by the way, but this is how it follows. 5 to 6 weeks time, you exchange contracts with your solicitor that we provided for you, and then you're going to pay 20%. And then the remainder, which is Q3 2024, the remainder is paid then along with your mortgage. That's how it works with all of our projects.
Yeah, and I think and that's a big reason why a lot of our investors choose the UK. And a lot of people ask why the UK over Dubai or other parts of the world. We know it's a safe haven from a financial aspect, but also a legal perspective as well. So you're paying that 20% down now, and you're not going to pay anything until completion. Whereas a lot of other areas around the world, you're going to these kind of like peppercorn payment plans and things like that. It's very clean cut, 20% on exchange of contracts and 80% on completion.
Thank you. Right, what have we got next? Pavilion Wharf. This is with another of our property partners in the middle of Manchester. Done very, very well with Pavilion Wharf, and that's why I put it up there. And you can see the picture. It's a beautiful looking building. Prices from, I'm going to read those out because you can read them yourself. 999-year lease, reservation deposit. Unlike what Mike just said, this one is 5,000, but everything else follows suit. And again, very, very similar completion date. But Manchester, what a city. I mean, Mike, you can talk about it as well. And I know, actually, let's bring Lee in. Lee, you were up there last week. Lee, what do you know?
Yeah, the location is superb. Just as you can see there, the river, there's a walkway as you come down the steps from the apartment, 6-minute walk into the city centre. Really good transport links around it to the university, out road leading straight out onto the motorway. Connections are really, really good.
Yeah, and you were only there last week, and you sent some photographs of the site. It does look pretty special.
Yes.
Right. Oh, back to you, Mike. Passing the ball back to you. You're on.
Yeah. So this is Bookbinder Point, and when we're looking at, we're talking about that kind of commuter belt, but this is actually in London. This is Zone 3 of London, on the west side. So we have Acton, which is on the new Crossrail, which is the Elizabeth line. Which, if anyone's ever looked at UK property in London, they would have heard about this fantastic line that has been in construction for the last, I don't know, 10 years maybe, but it finally launched at the end of last year. So as an example, from this, we're in Zone 3 London, you can get to Bond Street within 10 minutes, and you'll be in the financial district within 15 minutes. So great access, but it's giving you an opportunity to take an investment on the outskirts of London. Prices starting at 460,000, but you're going to have a rental yield of up to 5% gross, which in the past previously was completely unheard of in London. With regards to the project, it's already almost at roof level, and it's going to complete in Q1 2024. So construction is well underway. And with this project, it's only a 10% deposit down. So I think this is one of the reasons why this has been so popular. not only because you're within London at that price point, but also is a 10% commitment on exchange and then 90% on completion. So that's the big difference.
Although Mike and I are given sort of pocket views of these developments, Lee and Rob have got all the information on all of these, and in fact there is a webinar on all of these as well. But the other thing to say about Acton is unbelievable transformation in the area. I mean, it's miles and miles of the being completely transformed in West London, so it's a really good area now.
Yeah, and you've got three different train stations, 3 different tube lines within a 15-minute walk of this project. So depending on where you wanted to access, where you wanted to go to, whether it's to Heathrow, you go further out west on the Crossrail, you want to go into central London, they have those stations within a walking distance. And then if you take a look at where it's actually located, you're only a 20-minute walk away from one of the most affluent areas of London. You're down at Chiswick, you've got the River Thames there. It really is really close to a fantastic, affluent area, and that's only going to increase and grow and kind of gobble up this area as well. Kind of almost like Brighton and Hove coming together. It's exactly what's going to happen in London in these areas.
Yeah, and the internals there look great. As I say, this is only a snapshot. Got all the information if you need it. What's next? Excelsior Works. We only launched this again in Manchester. We only launched this 2 weeks ago, and I think my phone's just flashed up and a deal's just gone through. It's going fabulously well. Sorry, Mike. Fabulously well. And I'm going to tell you why. You can read the notes there. It's completed and it's tenanted. The story was that the guy built it and completed it, and then COVID came along, and so he didn't try and sell it because you couldn't get people to go and visit the property, etc. So he just tenanted it, and now he does want to sell it. So basically, a client comes along, he can buy his unit, there's a tenant in there, and so why I put it on this slideshow, if you like, is that you know exactly what you're going to get. You know exactly what you're going to pay, and you're going to know exactly what the rent's going to be. There's going to be no mystery. But good looking building as well. Again, 20%. I showed reservation fee on that one is 1,000. So I know we're skipping through this quick, but that's what we want to do. And finally, Mike, back to you. This is good, isn't it? It's working well.
Yeah,
this.
It's fantastic. I mean, when the RPA group launched, we joined partners with a developer called the King's Crescent Homes. Kind of a mid-sized developer, but well-funded, have their own construction team as part of their business. And what a partnership that was, and it's become, because this is Tyndall Court is the 3rd phase of a project, kind of, I guess, a master plan development within the jewellery quarter of Birmingham. I see we have some people from the UK on the call, and Birmingham itself, there's really only 2 areas that you go and kind of invest and buy in right now, and the jewellery quarter is the number one. Where it's located, it's only 8 minutes walk away from Paradise Circus, which is the main kind of employment hub, where you have HSBC, Deutsche Bank, PwC have just opened up 150,000 square foot office. So there's a great employment hub because of the HS2, which you spoke about earlier, which will complete, around 2026, 2027. And also there's a huge university hub there as well, around 80,000 students across 5 campuses. So from a tenancy perspective, and when we're looking at it as international investors, we want to know who's going to rent these apartments. Is there any demand? Well, Birmingham is the place where there is arguably the most demand in the UK and the least amount of supply. So that real supply and demand difference, the gap is huge in Birmingham. So it's great for us. Tyndall Court, as I mentioned, we just launched this earlier this month. It's going to complete Q4 2024. And, we have some great examples of the previous project that we sold, 2.5 years ago that's completed now, have some fantastic visuals and videos of that completed units from the same developer. So we can really see what's going to be delivered and how it's going to be delivered by them.
What I like about that part of the city is the history as well. I mean, it is just steeped in history, and these are, as anyone can see, it's a conversion. These are old buildings that they've been tastefully converted, and that goes along with scholars and also copper works as well, doesn't it?
Yeah, and I mean, look, it's called the jewelry quarter because I think there was around, well, still to this day, 40% of the jewelry that's made in the UK is made in this area. So it's not a huge, it's now becoming more residential. Obviously, as you mentioned, the buildings are being converted into residential. But with regards to the area, it's all low rise, nothing above 4 stories. There's over 200 protected buildings that are there that can't be touched, can't be changed. So, as an environment for tenants, and for young professionals and people that live there, it's fantastic. There's good restaurants, good kind of salons, barber shops, bars, gyms and bits and pieces, all kind of within this low-rise brick Victorian kind of terraced houses. So yeah, it really is a fantastic place. If anyone knows anyone from Birmingham and is thinking, let me ask someone who knows the area, would this be a good investment? By all means, I recommend you speak to anyone from Birmingham and ask them about the jewelry quarter.
And it's worth noting that you only launched.
I escaped without the accent, and it's definitely a very exciting area. It's full of historic buildings, and it is walkable everywhere. It's a fantastic city, and it's very young and vibrant. Lots of different cultures, lots of different, restaurants and stuff. It's particularly very nice.
That's great. And it's worth noting that the webinar is on Holborn propertyinvestments.com. I know, Rob, you never miss a webinar that we do on Property Thursday. And thanks for attending.
No, of course not.
Lee, hang on, I'm going to do one thing. No, I'm going to do it. Right. Now then, a couple of questions that come in. One in particular, they wanted to know a cash flow. So if you don't mind, I'm going to stop sharing my screen. And Michael, sorry, Rob, you're going to say something?
No, I was going to chip to the Q&A bits, but you can go with this one first because we have had quite a few questions on cash flow.
Yeah, we rehearse this. We rehearse it.
Yeah, so if I just share my screen here. So with all of our projects, we can produce this, what we call a cash flow. It's a full kind of investment outline Excel spreadsheet where we can show you exactly where all the pounds and pennies are going to be going. So, I mean, I'll just do it. I'll briefly just go through the details of it. This is an example of a 2-bedroom apartment that we have there. It's starting at 295. We talked about the reservation fee of £2,000 and 20% of the value on exchange. We've given this example of a 65% loan to value. So you can have 65% as a mortgage and you have 35% as your deposit. So it'll be 20% now and 15% on completion, and the rest will be a mortgage. Done a capital and interest mortgage. And these costs here, we're giving you an indication of what's going to be due with regards to valuation fees, bank lender arrangement fees, mortgage broker fees, furniture pack, which we can provide, stamp duty, if you're already an existing investor, and basically showing here what would be due in, we talk about 28 days time, that's the exchange period from reservation, 28 days. And then on completion, what you would need then as a second payment. So it's kind of split. So, if you're looking at this and you're thinking, yeah, I've got about 60, 70,000 pounds cash now, great. You can go into this investment with that, but just be mindful that you are going to need that 70,000 pounds in 18 to 24 months time. So you need to have a vehicle in place or know that you have that ready further down the line. And then just what does that mean on a monthly basis? And Chris, you mentioned earlier on about being cash flow neutral or cash flow positive, which is a name of a lot of our investors. And happily to say that even with the interest and capital repayment mortgage, this is cash flow positive. And the reason being is that the rents in Birmingham have gone extremely high recently. With this, we talked about the supply and demand. So actually looking at a £1,400 monthly income from a rental basis, you're going to, with all of the costs, your service fees, your letting and management fees, and your mortgage payments, you actually come out with £15 a month.
I mean, is that editable, Mike? If I can just, if you went to interest only, can you do that, or is it not?
We can do, yeah, we can do that.
Okay. I don't know if you can.
Sorry, this is the PDF. Sorry, it's not.
No, okay, sorry, I shouldn't have asked. But just to let people know, if it was non-interest only basis, that £15 is more likely to be £200. And don't quote me, but yeah, you're going to be cash flow positive on an interest only mortgage. But they're great numbers. They're great numbers, Michael.
And some of you investors that are on the call already might have eagle eyes seeing that and seeing ground rent as 0. The reason that's been is actually June last year, the government scrapped ground rent on all new build completions after June last year. So, you know, if you're looking at comparables of, well, I might go and buy a property as a secondary market unit, that is going to have ground rent. So any new build that we're providing now and the units that we've been talking about on this webinar, they can have zero ground rent. So really there is some saving there from buying a new build property as well. And then, you know, we look at the investment performance. Again, when we're looking at this, we're looking at this from a cautious standpoint as well. We're not giving out ridiculous kind of predictions. You know, looking at capital appreciation over the next 5 years of 15.9%, and over 10 years looking at 34%. So I mean, to say that Birmingham's going to grow 3.4% average for the next 10 years is being very cautious. Just to give you an idea that Birmingham last year average increased by 9%. So we know the market's changing slightly, and there's going to be a little bit of a slowdown potentially this year, but certainly that is a cautious prediction. And when you're looking at the return of your investment of 44% in 5 years, or just under 130% over 10 years, then we all know, you know, this is from a safe, sound, secure, financial, legal investment. It's a pretty good return.
Yeah.
Thanks, Mike. It's worth noting, by the way, although we just did one for Tyndall Court, we can do the same for any of the projects we have. And I know we've just done 6, and there are more, but you go back to Rob and Lee, or look at our website for Mike. That was a great presentation. Thank you.
Yeah.
Over to you, Rob.
Questions that have come in related to those numbers, actually. 2 people have asked a similar question with regards to the help we give in terms of finding mortgages. One of the clients is French, one is Canadian. They want to ask about obtaining mortgages in the UK on these properties.
Yeah, I mean, I'm happy to answer that. Yeah, so as Chris mentioned, you know, we have partners and mortgage specialists. You know, we're the property specialists, then we have these mortgage experts that we can put them in front of. You know, we recommend that you use them because they have access to the whole market of banks. And that's important when you're an international investor, is not just going to your bank, or, you know, HSBC is a great example. They do give good mortgage rates for their customers, but that's it. And they won't give it to any broker. So a broker can't access that. So if you're not a customer of theirs, you're not going to get their mortgage. So, you know, speak to a broker, speak to us. With regards to international investors, you'll be getting a mortgage from a UK bank. And then, you know, we do this on a weekly basis. So don't feel like just because you're not in the UK, or just because you may have never even been to the UK, you are still potentially eligible, obviously on an individual basis. They review it, but international investors from the majority of countries around the world are eligible to get a mortgage. But I think, Chris, you mentioned before the webinar that actually you guys do that pre-approval sometimes before.
Yeah, Darren and Donna, who are preferred brokers, you get in touch with them, Rob, myself, and you, Michael. You can recommend them. And there's a simple 4-page application form. You know, you're married, you're single, your age, your earnings, etc. And you can get that peace of mind. You don't want to get, you know, we talk about exchange and completion, but we don't want to get to completion, or 6 months before completion, try to go for a mortgage and find out that you can't do it. But I agree with what Mike said. We've got mortgages for people, obviously in the UAE, where all 4 of us are sitting, France, Canada, South Africa, Lebanon. There are obviously some embargoed countries around the world, but I don't think France would be one of those. But yeah, please speak to us.
No. Yeah. Somebody else has asked in terms of the interest rates, whether they've peaked now, whether we've seen the worst of the rates around.
Well, I can, Mike, this is true. This is a phone call I had today with somebody who's actually got a 4.1% fixed 5-year rate from their bank. Now, they are not expats, so I'm not saying that, but that goes to prove that the banks, and it was the Halifax, by the way, biggest building society in the country, if they're fixing at 4.1 for 5 years, they're expecting rates to come down. So, Mike, would you agree with me, looking at all the pundits, speaking to everybody? And by the way, you know, it's like trying to judge foreign currency. You can be very, very wealthy, you can get it absolutely right. But I do see that they're going to come down the other way.
Yeah, definitely. And look, I think we've definitely gone through the worst of it. That's for sure. You know, back end of last year, there was some scary high rates, and there was banks that were pulling out the market because they were being cautious, which is understandable. I mean, you know, if we were there in the position, we would have done the same thing. And just to give you an indication, so last week we had a client of ours who is an international investor got a 4.9% fixed rate. So when people are looking at, and actually a lot of people don't know that the banks, the mortgage rates aren't actually fixed to the base rate. So they're actually worked out on a spot rate, on a different rate completely. So it was quite strange to see that the bank interest rates are going down while the base rate actually went up. And what's happening is, you know, I think the figure is there's about 1.4 million people in the UK coming off of a fixed rate this year alone, right? So there's a lot of business there for banks. So they're not just going to keep on upping these interest rates because people won't be able to afford them. Also, people want the business. So now all of a sudden we're in this kind of price war that's happening between the banks, which is great news for us all. And I think when you're looking at interest rates, you know, that's where we have some projects that have completed units. And we showed, again, Chris, you showed the one in Manchester there. There are some good rates that you can still get now, for sure. But then if you are that cautious and you're thinking, oh, you know, that's not really where I want to be, well, you know what, we have projects that are off plan for another 12, 18 months. And there's predictions that rates, I don't think, and we don't think they're going to go down, the base rate won't go down back down to under 1%, but the 2 to 3% base rate is well within the realms of possibility within the next 12 to 18, 24 months. Yeah, so actually it's not a bad play to say, I'll hold off. I mean, what do you think, guys? Is that something that you...
No, I would concur with that entirely, Michael. And I think it's also worth noting that from the cash flow report that was shown earlier, we're working on a worst case scenario at 65% loan to value. You know, if we flip back 12 months ago, there was 75, 80% mortgages available. And we would expect that to be the case again within the next 12 months, certainly.
Lee, that's us being cautious, quoting 65. There are still 70 and 75% mortgages out there for expats. So that's just us being cautious.
Rates, though, yeah, for the better rates, we would expect to realign in the near term.
Yeah, good. Agree. All right. The other questions were there that were sort of basically asking why Birmingham and Manchester are hotspots in terms of the redevelopment of stuff. I mean, I think we've covered that really in terms of their regeneration programs. They're formerly, you know, industrial, you know, cities, and you know they call Birmingham the second city in the UK after London. Another person has asked in terms of finding tenants. So Michael, maybe you might want to cover this. They're saying, how do they find tenants? How is that all sorted? Would you like to cover that?
Yeah, definitely. I mean, we have internally we have our own property management company, and there are other property management partners out there. But what we do is we have, with our development, we would always offer any investor the opportunity to speak to them, and they'll speak to them early days. So after exchange of contracts, even if you've got 2 years before your build is completed, we'll always speak to you early on and just explain the process. And basically what that is that 2 to 3 months before completion, we will be liaising with the developer anyway. We'll bring the management team in. They'll know what date and when your property is going to complete. A month beforehand, they will start preparing, start kind of looking at the local area, what are the potential rents, and then update you on how that rental has been performing over the last 6 to 12 months, whatever it may be, and update you on what we think that the property should be rented at. And then as soon as there's access to the site, as soon as they have access and you complete and you get your keys, they will go and collect the keys on your behalf. So you don't have to travel to the UK. You can stay wherever you are in the world. They'll collect your keys, do a snagging, go and check the apartment, take a video for you. And then ultimately from that moment, take pictures and market that property for you. And their goal is to get that rented as quickly as possible. And you just got to think that is their business. That is their core business. And if they don't rent any properties, they don't make any money and they haven't got a business. So it's good to have someone on board. Yes, you're going to get charged a fee for their services, of course. I myself, I'm an investor in the UK. I have a management company looking after my property. And it was one of the best things I do because I have no hassle, no worries. If and when there are things, light bulbs or whatever needs to be fixed, they contact them and it gets done. And I don't even know about it. I just see an email from the management company. So it's definitely worth considering and having on board whichever management company you use. that is definitely something that I recommend you do.
Yeah, yeah. In your experience, actually, because somebody's asked about void periods on these kind of properties, what would you say about your void periods in terms of between tenants?
I mean, look,
Mike, can I just answer that quickly and then go back down to you, because we're talking about two different things here. We've got the long-term, or actually called a short-term tenancy, which is probably a year, and then you've got the Airbnb, which we mentioned earlier on. But with all of our properties on the short hold tenancy, the year by year, I think with your company RPA, I think you're at 99% at the moment from some stats I saw from you or from Richard. 99%, no void.
Yeah.
The only void you're getting is when people move out and a week to clean the place up before the next person moves in. So there's so much demand in all these areas. We're not going, let's not get bogged down in Manchester or Berlin, but it's all about supply and demand, and we would not be doing it if there wasn't demand from the tenants. So, but Mike, when it comes down to void periods on the short hold tenant, the Airbnb style, what would your answer be? I don't know the answer to that.
My answer would be, if you're going to panic when you see that no one's booked in at any point during the year, don't do it.
Okay.
It's one of those things where, it's almost like, I don't know, it's almost like putting your money into stocks and then but having an app on your phone and looking at it every day and watching it go up and down, up and down, up and down, and panicking all the time. You've got to be in it for the long haul, and you've got to think of this as an annual, as one year as total. Because let's look at Birmingham as an example, and Manchester's very similar. You can look at two real hot periods of times of the year: Christmas and summer. Because in Birmingham they've got the huge Christmas German market, which people travel all over the country and Europe to go to Birmingham. Strange, I know, but it happens. So the place is crazy then, and they have the NEC, which is the largest event space in the whole of the UK for events and exhibitions. And similar with Manchester, you've got the MEN Arena, or what used to be called the MEN Arena. You've got Old Trafford, you've got City, you've got everything that's going on in Manchester, which will be a hotbed at certain parts of the year. I think the beauty of having a management company on a short-term let, again, they don't make any money if your property isn't rented. So what they'll do is they'll probably, a good short-term let company will move that value and the price of your property up and down throughout the year. So 1 month it might be, let's say it's £150 a night. 1 month it might be £100 a night, but they're going to get someone in there. And that's where you have to look at it as a whole for the whole year and say, okay, do it in January. I come back next January. How did it go? How did it work out? Because you can always go back to the traditional long-term rentals.
I've just been told to put the lights on, so I put the lights on. So thanks, Vincent.
Good. I think we've covered all the questions that everyone's asking. I think to sort of like summarize, the gist of it. People were asking about mortgages as international clients. That's definitely not a problem to us. We've answered the questions about rates being sub 5% for fixed rates, and the ability for people to pre-approve for mortgages if they're particularly worried about buying off plan. We've covered the rental options, the long term and the short term. So unless there's any other questions that I can quickly sort of pose from the Q&A, I think we've covered everything there.
I don't think it's not so much a question, it's more of a comment for everyone that's on the webinar today, is just to understand, how we work, and, that if there is any interest, or, if there isn't anything that we haven't covered today, or there's been a lot of information today in a short period of time. So, tomorrow, the next day, if something pops up in your mind, you think, actually, I want to ask that question, get in touch with the guys. Let's set up let's have a private consultation. Doesn't cost anything. We can talk about the market if you want to talk about that, or pick a project and delve into it in a bit more detail. So anyone in Dubai, obviously, we're happy here to meet for a coffee and meet in person. But anyone else remotely, we're all now happy on a Zoom call, and we can get in touch.
That's perfect. Thank you, Michael. Thank you. Thank you, everybody else, for helping with this evening, and thank you for joining us. As I say, we'll touch base with you individually to make sure your questions are dealt with. And again, thank you very much, everyone, for joining.